Welcome to Tax at the End. In today's video, we'll explain you about the guidelines issued by CBDT with respect to Section 194Q of the Income Tax 1961. Circular number is 13/2021, dated 30th June 2021. Finance Act 2021 inserted a new Section 194Q in the Income Tax Act 1961, which is effective from 1st of July 2021. This section is applicable to a buyer who purchases goods of a value or aggregate of value exceeding 50 lakh rupees in any previous year. Buyer, at the time of making such purchases, that is, at the time of crediting such amount to the account of seller, or at the time of payment, whichever is earlier, he is required to deduct tax at the rate of 0.1% of the amount exceeding 50 lakh rupees. Question is, who is a buyer now? Is it defined? Yes. Buyer is a person whose turnover or gross receipts or total sales exceeds 10 crore during the financial year immediately preceding the financial year in which such purchases were made. In order to remove the difficulties in implementing the provision of Section 194O, Section 206C1H and Section 194Q of the Income Tax Act 1961, CBDT has come up with the guidelines. Guidelines has addressed the queries with respect to applicability of Section 194Q on transactions carried through various exchanges. It has been clarified that Section 194Q shall not apply on transactions in securities and commodities which are traded through recognized stock exchange or cleared and settled by the recognized clearing corporation, including those located in International Financial Service Center. Section 194Q shall also not apply on transactions in relation to electricity, renewable energy certificates, energy saving certificates, traded through power exchanges registered in accordance with Regulation 21 of CERC. Calculation of threshold for the financial year 2021-22 was always a question in mind since the Section 194Q was introduced. It has been clarified in this guidelines that since the Section 194Q mandates a buyer to deduct tax at the time of purchases, that is, when he is crediting the amount in the account of a seller or while he is making the payment, whichever is earlier, the provision of this section shall not apply before 1st July 2021. That is, if you made a payment to your seller or if you made purchases before 30th June, that shall not be taken into account. TDS under Section 194Q shall apply on all credit or payment during the previous year only on or after 1st July 2021. Another question which was always in mind when Section 194Q was introduced in Finance Act 2021 was, when tax has been deducted, should it be including GST or excluding GST? With respect to tax collection at source, that is 206C1H, there was a circular numbered 17/2020 dated 29 September 2020 which clarified that no adjustment on account of GST is required for collection of tax at source under Section 206C1H since the collection is made with reference to the receipt of amount of sale consideration. However, the situation is different so far as TDS is concerned. When GST was introduced in 2017, it had been clarified White Circular number 23 of 2017 dated 19th July 2017 as wherever in terms of the agreement or contract between the payer and payee, the component of GST on services is separately indicated, tax shall be deducted at source on the amount paid or payable without such GST on services. However, this circular did not have any mention about GST on goods. Accordingly, with respect to TDS under Section 194Q of the Act, it has been clarified that when tax is deducted at the time of credit of the amount in the account of seller and in terms of the agreement or contract between the buyer and the seller, the component of GST comprised in the amount payable to the seller is indicated separately, tax shall be deducted under Section 194Q of the Act on the amount credited without including such GST. That is very simple. If GST is clearly mentioned in the invoice or indicated separately in the agreement or in the invoice, then TDS under Section 194Q of the Act shall be made without including such GST. Clarification is with respect to purchase returns. What has to be done or what is the treatment of TDS when there is a purchase return? At the time of purchase or at the time of payment to the seller, the buyer would have deducted TDS under Section 194Q. So what happens when there is a purchase return from the buyer to the seller? In such cases, where the money is already paid to the seller and the tax has already been deducted, such tax already deducted can be adjusted against the next purchase against the same seller. No adjustment is required if the purchase return is replaced by the goods by the seller, as in that case the purchase on which tax was deducted under Section 194Q of the Act has been completed with the goods replaced. When Section 194Q was introduced in the Finance Act 2021, it had clearly mentioned about the seller being a resident in India. But there was no specification whether a non-resident can be a buyer under Section 194Q of the Act. It has been clarified that the provisions of Section 194Q of the Act shall not apply to a non-resident who purchases goods from a seller who is resident in India and not effectively connected with the permanent establishment of such non-resident. Permanent establishment has been defined to include a fixed place of business through which the business of the enterprise is wholly or partly carried on. So example, a person in US purchases goods of a value exceeding 50 lakh from a seller resident in India. Section 194Q of the Act is applicable only when such a non-resident has a permanent establishment in India. Otherwise, Section 194Q is not applicable to such non-residents. Next clarification is whether tax is to be deducted when the seller is a person whose income is exempt. The answer is no. Section 194Q of the Act shall not apply to a seller whose income is exempt. That is, the provision of Section 194Q shall not apply when a buyer purchases the goods from a seller whose income is exempt, that is like a person who is exempt under Section 10 or under any other act passed by the Parliament. Similarly, with respect to Section 206(1)(h), it has been clarified that if a person is selling the goods to a buyer whose income is exempt under Section 10 or under any other act passed by the Parliament, then even 206(1)(h) is not applicable. So, either under Section 194Q or 206(1)(h), the buyer or the seller will have to take a declaration from the other party whether their income is exempt under Section 10 or under any other act. Whether tax is to be deducted on advance payment. It has been clarified that since the provisions of this Section 194Q is on the purchases, that is when you credit the amount in the account of the seller or when you make the payment to the seller, whichever is earlier. So the point of taxation is at the time of payment or at the time of credit, whichever is earlier. The provisions of Section 194Q shall apply. Hence, when an advance is paid to the seller by the buyer, yes, section 194Q of the Act is applicable. If a buyer has incorporated his business, say for example in the financial year 2021-22, and he purchases goods of value exceeding 50 lakh from a seller who is resident, is he required to deduct tax under section 194Q of the Act? The answer is no. It has been clarified that section 194Q of the Act shall not apply to the buyer in the year of incorporation, because a buyer is defined as the person whose total sales or gross receipts or turnover from the business carried on by him exceeds 10 crore during the financial year immediately preceding the financial year in which such purchases is made. Since this condition would not be satisfied in the year of incorporation, the provision of section 194Q shall not apply to the buyer in the year of incorporation. Next clarification is whether the provision of section 194Q of the Act shall apply to a buyer if the turnover from business is 10 crore or less. Answer is no. Section 194Q clearly has mentioned that the buyer is a person whose total sales or gross receipts or turnover from the business carried on by him exceeds 10 crore during the financial year immediately preceding the financial year in which purchases is made. Say for example, a person has a business income of 8 crores and income from house property 2 crores and income from other sources another 1 crore. So, all the three put together it exceeds 10 crore. But the turnover from business is only 8 crore. Hence, section 194Q is not applicable to such buyers. The sales or gross receipts or turnover from the business carried on by him must exceed 10 crore. Only then the provision of section 194Q of the Act shall apply. His turnover or receipts from non-business activity shall not be counted for this purpose. Next clarification is with respect to the cross application of section 194O, 206C1H and section 194Q of the Act. Section 194O is with respect to e-commerce operator, 206C1H is with respect to tax collection at source on sale of goods. Section 194Q is with respect to TDS on purchase of goods. As per section 194O subsection 3, a transaction in respect of which TDS has been done by the e-commerce operator, then it shall not be liable to tax deduction at source under any other provision of this Act. As per section 206C1H, provisions of this section shall not apply if the buyer is liable to deduct tax at source under any provisions of this Act on the goods purchased by him from the seller and has deducted such tax. As per section 194Q subsection 5 of the Act, the provision clearly had mentioned that this section shall not apply to a transaction on which tax is deductible under any other provisions of this Act and tax is collectible under the provision of section 206C other than a transaction on which 206C1H applies. Hence, if a tax has been deducted by the e-commerce operator on the transaction under section 194O, then the transaction shall not be subject to tax for deduction at source under section 194Q of the Act. Section 194O shall prevail over or shall override section 194Q of the Act. Similarly, if a transaction is within the purview of section 194O as well as section 194Q of the Act, tax is required to be deducted under section 194O of the Act and not under section 194Q of the Act. Similarly, If a transaction is both within the purview of Section 194O and 206C1H, tax is required to be deducted under Section 194O of the Act. The transaction shall come out of the purview of Section 206C1H after tax has been deducted by the e-commerce operator. Once the e-commerce operator has deducted tax on the transaction, seller is not required to collect tax again on the same transaction. Here the primary responsibility is on the e-commerce operator to deduct tax under Section 194O, and the responsibility cannot be condoned if the seller has collected tax under Section 206C1H. The reason being, the rate of TDS under Section 194O is higher than the rate of TCS under Section 206C1H. If a transaction is both within the purview of Section 194Q and Section 206C1H, then tax is required to be deducted under Section 194Q. The transaction shall come out of the purview of Section 206C1H. That is, if the buyer has deducted tax on a transaction, seller need not collect tax at source under Section 206C1H. However, for any reason, the tax has been collected by the seller under Section 206C1H, then the buyer need not deduct tax again on the said transaction under Section 194Q. This concession is being given because the tax rate of deduction and collection are the same under Section 194Q and Section 206C1H of the Act. Thank you for your time, and we look forward to hear from you. For more such videos, watch our channel and follow our page on Instagram, Facebook and Twitter.